right, so let's bring in our shareholder panel now to see what they think. Ultimately, that's what matters most now. Brenda Vingiello, shareholder of Apple. All right, so you've digested all of this. What do you think?
Yeah, in our view, I think a big important part of the Apple story is enhancing products, making things easier. We heard a lot of those little tiny things that weren't a big, sensationalized thing like the AR/VR headset, but we did hear about a lot of little tiny tweaks that'll make life easier for Apple product owners. And so I think that's an important part of the story is keeping people engaged, having some new features, even if they're not completely transformative, but things that make life easier while you're using their products, being able to sell more products to customers, and hearing about enhancements of things like the watch, adding new features for things like cyclists, things like that might, move somebody over the tipping point and saying, okay, I was thinking about the watch, now maybe I'll get one because it has these extra features that really will help enhance my life in some way.
See a little bit of a sell on the news today. That sometimes happens with events like this. Who knows why it's occurring? $3,500 is the price tag we have for Vision Pro. One of the questions we asked coming in is an event like this capable of keeping the momentum going for a stock that's already up more than 40% year to date? How would you answer that?
I think it's good to have a future growth driver, even if we don't believe that the growth is going to happen right here and now. It's a product that they can enhance and iterate and eventually probably have more of a mass market product. And for now, it can be an aspirational purchase. And in the meanwhile, we'll have a lot more content between now and then and usability for the product. So I think it's still good to have something to look forward to as a potential new growth driver for the company, even if we're not expecting anything in the next 12 to 18 months. That's really going to be really material.
You doing anything with your shares? You took some profits in NVIDIA.
We did.
Now, NVIDIA is up like 170% year to date. So Apple's not up quite that much, but at 30 times forward earnings, and what you're witnessing here today, it hits this new high. Are you thinking at all about that?
Yeah, I do think this multiple is getting pretty rich for the company because over the longer term, the thing that we worry about is, on Apple's last conference call, they talked about how there were 2 billion active devices being used worldwide. That's a lot. The biggest question is, that's great. You can do some cross-selling within that customer base, but how do you grow exponentially from there? They just already have so many products and are so penetrated, they can keep a replacement cycle going and sell a few new products here and there. But I think the bigger question is, how do you grow like you did over the last decade? I just don't think it's going to be possible. So in our view, that probably means that it probably doesn't get a 30 multiple over the longer term. We probably see it settling in, and I do think with tech overall this year, that's been so fantastic, but I wouldn't be surprised to see a period where maybe things just go sideways for a while, and maybe there's catch up from some other sectors that really haven't participated in the rally that we've seen this year.
Yeah, the rally, by the way, in Apple, as you see on your screen here, is dissipated. Stock's down more than 1%. We're at session lows for the market as well. Certainly the Dow and the NASDAQ as a result of Apple's weighting there. Malcolm Ethridge, it brings me to you, where I just see that you sold half of your Apple position a week ago. Is that correct?
Yeah, I actually sold it, not related at all to the headset. I'll get into that in a second as much as you want to. But I actually sold Apple last week, along with Microsoft, half of my position in both of them because I had been adding to both of those positions all through last year, about a year and change ago since. And it had gotten so overweight. And I'm looking at how much the market has run up in the last, since March, basically, let's call it, in those tech names. And so it looked like a great point to be taking some profits, to create liquidity, too, to be able to go after some other opportunities, because I do believe, as hot as we've gotten in the last few months here, the market's going to have a cooling off period, or at least an opportunity to go and buy back some of these shares at a much better price point. I think we're getting a little bit too far over our skis right now.